Well, today we're going to be taking a look at Canada's banking sector.
Oh, interesting.
Yeah, it's something that's been in the news a lot recently, and we came across this article that asked a pretty thought-provoking question. Is Canada's stable banking system actually holding the country back?
That's a pretty bold statement. I mean, Canada's banks are known for being super reliable.
Right, exactly. Which is why this article really caught our attention. It dives into some potential downsides that we don't often hear about.
I'm all ears. Let's break it down.
Okay, so the first thing the article talks about is this idea of an oligopoly. Have you ever heard of that term?
Yeah, definitely. It basically means that a market is dominated by just a few powerful players.
And in Canada's case, those players are?
The big five banks, of course, RBC, TD, BMO, CIBC, and Scotiabank.
Ah, the big five. They're like the celebrities of the Canadian financial world.
Uh-huh. Yeah, pretty much. And the article points out that they even have ownership stakes in each other.
Wait, really?
Yeah, it's kind of wild. They're all intertwined in a way that makes them even more powerful and makes it incredibly hard for new banks or financial companies to enter the market.
So basically, they've built a financial fortress that's almost impossible to penetrate.
Exactly. And that lack of competition can have some serious consequences.
Okay, so let's talk about those consequences. If it's so hard for new companies to break into the market, what does that mean for regular people like me?
Well, think of it this way. Imagine there's only one grocery store in your town.
Oh,
They can pretty much set whatever prices they want, and you're stuck with their limited selection.
that doesn't sound good.
It's not ideal. And that's kind of what's happening in Canada's banking sector. The lack of competition can stifle innovation, which means fewer choices for consumers and potentially higher costs.
So less competition means the big banks don't have to work as hard to win my business.
You got
That makes sense. But the article also mentions something called fintech. What exactly is that?
Fintech is short for financial technology. It basically refers to all the cool new ways technology is being used in finance.
Like what kind of things?
Think online banking mobile payments apps that help you invest, and all those digital banks you see advertised online.
Ah, okay, I'm starting to get it. So is Canada falling behind in the fintech race?
That's what the article suggests. It argues that Canada's banking oligopoly might be slowing down fintech development, which could put us behind countries that are embracing these innovations.
So we've got limited competition and potentially lagging fintech. What else does this article point to as a potential problem?
What makes the case that Canada's economy relies a little too heavily on the banking sector?
Okay, I can see how that might be an issue, but why is that such a big deal?
Because it makes us vulnerable. Think of it like putting all your eggs in one basket. If something happens to that one basket, you're in trouble.
I see your point, but how does that actually play out in the real world?
The article uses this term, uneven capital allocation. It basically means that money isn't flowing freely to all sectors of the economy.
So where is it going instead?
A large chunk of it is concentrated in the banking sector and more traditional areas like real estate.
So instead of that money going into new innovative sectors, it's getting stuck in real estate.
You got it. And that can have some pretty significant consequences.
Like what? Give me an example.
Well, the article highlights the close relationship between the banking sector and the housing market in Canada.
Oh, yeah, I've heard a lot about that. Isn't real estate supposed to be a safe investment, though?
It can be. But things get a little complicated when you consider just how intertwined banks are with the housing market.
Okay, how so?
Get this. The article points out that the total value of mortgages in Canada is almost equal to the country's entire GDP.
Whoa, that's a crazy amount of money.
It is. And it suggests that banks have a vested interest in keeping those housing prices high.
Because they hold so many mortgages.
Exactly. If housing prices were to drop suddenly, the banks would be in a really tough spot.
So it sounds like they have a big incentive to keep the housing market inflated, even if it makes it harder for regular Canadians to afford homes.
That's the argument the article is making. And it uses a specific example to illustrate this point.
Ooh, I'd love a good example. Lay it on me.
Remember back in 2024, when Canada cut interest rates before the U.S. Federal Reserve did?
Yeah, I vaguely remember that.
Well, some experts argued that this was done to prop up the housing market and protect the bank's mortgage portfolios.
Even if it meant increasing the risk of a housing bubble.
Precisely. It's a pretty controversial move, but it shows how closely tied the banks are to the housing market and how their actions can have a ripple effect throughout the economy.
Okay, so if the banks are potentially influencing interest rate decisions, what does that mean for the average Canadian who's just trying to buy a home or manage their debt?
That's where things get really interesting. This is where we start talking about household debt and how it all ties into this bigger picture.
Okay, let's talk debt. I'm all ears.
Prepare to be shocked. Did you know that 2/3 of the average Canadian household income goes towards rent or mortgage payments?
2/3? You're kidding me. That's insane.
It's a staggering number, right?
Yeah.
And it means that a lot of Canadians are stretched incredibly thin financially.
Yeah, that doesn't leave much wiggle room for anything else.
Exactly. Any increase in interest rates or unexpected expenses could have a devastating impact on a lot of families.
Okay, so we've got this potent mix of limited competition, a banking sector that's super tied to a potentially inflated housing market, and Canada's drowning in debt. Is there any way out of this mess?
That's the million-dollar question, and the article doesn't offer any easy answers, but it does raise another critical point, something called the crowding out effect.
Okay, what's that and why should I care?
Imagine a bunch of brilliant Canadian entrepreneurs. They're full of ideas, and they're trying to start businesses in sectors like green energy, tech, or even healthcare. They need capital to get going, but they're facing an uphill battle because so much of that capital is tied up in the banking sector and real estate.
Ah, so that's what you mean by crowding out. These promising new ventures are getting squeezed out because all the money is going to the big banks and the housing market.
Exactly. And the article argues that this crowding out effect is a major roadblock to innovation and economic growth in Canada.
Okay, so if that's the problem, what are some potential solutions? Did the article offer any concrete advice?
It didn't lay out a step-by-step plan, but it did hint that increasing competition in the banking sector could be a good starting point.
I see where you're going with this. But this seems pretty tough to pull off, right? I mean, these banks are huge. They're practically woven into the fabric of our financial system.
It definitely wouldn't be easy, but there are some things policymakers could consider, like reducing barriers to entry for new players in the financial market.
So make it easier for smaller banks or those fintech companies we talked about to get a foothold.
Exactly. It could involve streamlining regulations, offering incentives for new entrants, or even exploring the idea of a public banking option.
A public bank, like a bank run by the government.
Yep. It's more common in other countries, but it's an idea that's gaining traction in Canada.
Okay, I'm intrigued. Tell me more. How would that work?
Well, essentially, a public bank could offer more competitive rates and products, and it could also focus on lending to areas that private banks often overlook.
So areas like affordable housing or those innovative businesses that are struggling to get funding.
Precisely. A public bank could help to channel capital to where it's needed, most potentially addressing some of the issues we've been discussing.
That's a fascinating concept. Okay, so we've got more competition and maybe even a public banking option, but wouldn't this whole thing also require regular Canadians to be more financially savvy? Like, we need to know what we're doing right.
You hit the nail on the head.
Yeah.
The article really emphasizes the importance of financial literacy and education.
Makes sense. The more people understand about personal finance, the better equipped they'll be to navigate this whole system.
Exactly. It's about empowering individuals to make informed decisions and take control of their financial futures.
So it's not just about changing the system. It's about equipping people with the knowledge and skills to make smarter choices.
Absolutely. And that also means demanding more transparency and accountability from our financial institutions.
Okay, I'm on board with all of that. But let's go back to this idea of Canada relying so heavily on the banking sector. How do we actually diversify our economy so it's not so vulnerable?
That's the big question. And it requires a bit of a mindset shift. We need to think long-term and be willing to invest in sectors that might not offer immediate returns, but hold the potential for sustainable growth.
So instead of just chasing quick profits, we need to focus on the bigger picture.
Exactly. We need to look beyond those traditional industries and embrace areas like technology innovation, green energy, and even the creative industries.
But those areas are already getting some attention, aren't they? I mean, we hear about tech startups and green energy initiatives all the time.
They are, but as we discussed earlier, that crowding out effect is a real obstacle. With so much capital flowing to the banking sector and real estate, it's hard for these emerging sectors to really compete for funding.
Right back to that sponge analogy, we need to figure out how to squeeze some of that money out and redirect it to where it can make a real difference.
Exactly. And that might require some pretty bold policy moves like tax incentives for investing in strategic sectors or government-backed venture capital funds that specifically target innovation.
Okay, so we need more competition, better financial literacy, a potential public bank, and a shift in focus toward innovation and sustainability. That's a pretty ambitious to-do list. Do you think there's actually the political will to make these changes happen?
That's the million-dollar question, isn't it? Change is never easy, especially when it involves powerful interests and long-standing systems.
And especially when those in power might benefit from keeping things the way they are.
Precisely. But as we've seen time and time again, even the most seemingly entrenched systems can change when enough people demand it.
So it's not just about policymakers. It's about everyday Canadians making their voices heard and pushing for a better future.
Absolutely. It's about recognizing that we all have a stake in this and that our collective actions can make a real difference.
Okay, I like that message. It's empowering. But before we wrap up this whole revolution talk, let's circle back to this issue of regulation. We touched on it earlier, but it's worth digging a little deeper into this whole balancing act of regulating a powerful sector like banking. All right, so we've talked about shaking things up, bringing more competition into the banking world, and even the idea of a public bank. But how do we make sure it doesn't all just go off the rails? I mean, we're talking about people's money here. How do we find that sweet spot between encouraging innovation and keeping things stable?
It's a delicate balance for sure. Regulation is like walking a tightrope. Too much, and you stifle growth and creativity.
Yeah.
But too little, and, well, we've all seen what can happen when the financial system runs wild.
Yeah, no one wants a repeat of 2008. But this whole fintech thing throws a wrench in the works, doesn't it? I mean, how do you regulate something that's constantly changing the rules of the game?
You're absolutely right. It's a whole new ball game for regulators. Those old school methods might not cut it anymore.
So what's the answer? How do we keep up?
Well, the article mentions something called regulatory sandboxes. Have you heard of those?
Sandboxes, like at the playground.
Haha, not quite. But the idea is kind of similar. It's a controlled environment where fintech companies can test out their innovations under the watchful eye of regulators.
So it's like a safe space for experimentation, a financial lab of sorts.
Exactly. It lets regulators learn about these new technologies and business models while still making sure that consumers are protected.
That actually sounds pretty smart. So maybe there's hope for navigating this new financial landscape after all.
There's always hope. But it requires vigilance, flexibility, and a willingness to adapt. We need regulators who are forward-thinking and ready to embrace change.
So looking back at everything we've uncovered today, the potential downsides of Canada's banking system, those innovative solutions like a public bank and the need for smart regulation. What's the one thing you want our listeners to take away from this deep dive?
I think the biggest takeaway is that the future of Canada's economy is not predetermined. It's a living, breathing system, and we all have a role in shaping it.
Okay, so what can the average Canadian do to make a difference, besides tuning into this podcast, of course?
Stay informed. Stay engaged. Understand how the financial system works. Know your rights as a consumer and hold your elected officials accountable.
So don't just sit back and grumble about high bank fees or a crazy housing market. Get out there and make your voice heard.
Exactly. Remember, the future of Canada's economy is something we all have a stake in shaping.
I love that. That's a great message to end on. We've explored some pretty complex stuff today, but it's really just the tip of the iceberg. We encourage everyone listening to keep digging into these issues, share your thoughts, and be a part of creating a brighter financial future for Canada.